Friends, in this video, I'm going to talk to you about what to do with your SIPs. We all have SIPs running. Many of us have begun our SIPs in the last 5 years. We continue to run our SIPs. As the markets are near their all-time highs, the question that comes to our mind is, what should we do about our SIPs? Should we run them? Should we increase them? Should we stop them? Or should we change them? I am going to address these questions in this video. If you already run an SIP, I believe that you should continue to run the SIP. Should they be in the same fund choices? That depends on what type of funds you have chosen. If you have been invested in large cap funds with very heavy exposure in financials, consumer and pharma, I would probably consider a new idea to start an SIP. In that sense, I would switch my SIP from this theme to another theme. On the other hand, if you are a type who thinks that changing is too much work, why bother? Then I would at least protect my long-term investments that I have done in SIPs by taking profits from the long-term units. So by doing that, I would capture the benefits of my past investments, convert it into cash and keep it ready so that I could invest whenever the markets give me a better opportunity. I would continue to run my existing SIP. If I want more returns, if I want my portfolio to be aligned to the future, if I want to capture the future trends in my portfolio, if I want to chase the emerging investment ideas even in mutual funds, then I would go ahead and change my SIP. If my SIP is aligned to what I want, then I have a better prospect in the future. So I would change my SIP to increase my allocations to better funds which will perform in a superior way going forward. There always will be emerging themes. If mid cap was an emerging theme in 2014, large cap was the emerging theme in 2017, probably today we need to hunt for the next emerging theme. I would do that if I am a progressive and a dynamic investor. Then should I increase my SIP? This is the third question that I am going to answer. If you are seeing your incomes grow, at every point in which your income grows, I believe that you should increase your investment in proportion to the increase in income. So if your income has grown up by 20%, your SIP should also increase by 20%. That extra 20% gives you an opportunity to choose newer themes, newer ideas, or increase your asset allocation or towards assets you don't have like gold, or simply increase the existing investments. That's a choice which you should make after due consultation or hard thinking. So I leave that to you. If this increase happens, immediately the SIP should be raised. So income increase should be accompanied by increase in your investment also. That ensures that your savings rate at least remains constant. Some people also increase their savings rate, but I leave that to the individual wisdom of each investor. Lastly, should I stop my SIP? In every market peak, this is a question that comes to people. I find a lot of people moving from mutual funds to equity also. The reasons are mostly related to returns. I think people keep changing their return expectation according to the market context. But I believe that an investor should set his return expectation according to the economic context, not the market context, because markets anticipate future economic context, sometimes positively, sometimes negatively. Over the last year, the markets have anticipated all the positive economic changes which we will see in our country. It's very probable that sometime in the future we may also anticipate some negative shocks, and the stock market will reflect that. Therefore, we cannot assume that the returns of the past 1 year will continue over the next several years. They will fluctuate and we will probably arrive at a median return which is lower than the returns of the past 1 year. An investor must keep this in mind and set his return expectations according to that, and then align his investment journey to that expectation. So, you should not change your SIPs simply because near term returns in some parts, maybe the Nifty or some specific themes, is higher. Then you are actually reacting to past performance rather than what the future presents before us. I don't think that is a wise thing to do. So, stopping an investment is something you should not do. I believe that you should continue the investment. If you feel the risks are too much, you can choose an investment of lower risk and continue the investment. If you feel that you can continue to take the same risks, you can continue with the same investments. If you think you can change your risk little lower or higher according to the market context, fresh choices are the option. Effectively, you need to run your SIPs, ensure your choices are futuristic, scale them to match your income changes, and never stop investing your savings. That in essence captured how you should deal with your SIPs. Thank you for watching this video. Do share it with your friends who have also embarked on this journey of saving and investing through SIPs. Do stay the course with us. Thank you very much.